Today, we're analyzing a major geopolitical development, a move that could ripple through energy markets, stocks, and cryptocurrencies. In this video, we'll break down why these events matter, what trends to watch, and how they could affect your personal finances. This isn't just headlines, it's about understanding the systems that move your money.
Let's start with context. Venezuela has the largest proven oil reserves in the world, and any instability in the region has historically affected global energy prices. The U.S. involvement adds a new layer of complexity to global supply and market risk. But why does this matter for markets? Investors price in potential risk long before prices actually move. When energy supply risks rise, oil futures react, and that, in turn, impacts inflation expectations, transportation costs, and the broader economy. Understanding the link between geopolitical events and financial markets is key for any investor. It's not just politics, it's economics in action. Despite the news, major U.S. stock indices are relatively calm, but calm markets can be misleading. Historically, periods of low volatility during major geopolitical events are when positioning quietly shifts behind the scenes. Investors often reallocate capital from speculative assets to safer or counter-cyclical sectors, preparing for market stress. For example, energy stocks often rise, benefiting from expected supply constraints. Defense and infrastructure stocks may see inflows. Growth-oriented tech stocks often face pressure during uncertain times. Watching these movements early can provide insight into broader market trends. Energy is the first thing most Americans feel. Even a small disruption in Venezuelan oil production can influence prices at the pump. Higher oil prices increase transportation costs, which flow through the economy and raise prices for goods and services, a chain reaction reflected in inflation measures. For investors, understanding these trends is critical. Energy-related ETFs or commodity positions can be affected long before news headlines reflect the changes. Next, let's consider crypto markets. Bitcoin is often positioned as digital gold, but in practice it behaves like a high-risk tech asset during uncertain periods. During geopolitical stress, if investors fear inflation, crypto can see inflows as a hedge. If liquidity tightens, risk assets, including crypto, may sell off. This dual nature makes crypto a unique case study in how market psychology interacts with real-world events.
Looking beyond immediate market reactions, geopolitical events like this highlight systemic risks. How energy markets interact with inflation, how central bank policy influences market stability, how global events impact U.S. employment and economic growth. For example, unexpected shocks can influence Fed policy, affect interest rates, and indirectly impact savings, mortgage rates, and investment returns. Understanding these linkages turns daily headlines into actionable insight. So what can we learn? Stay informed, not just the news, but the trends driving market behavior. Monitor sectors likely to react: energy, defense, infrastructure, and risk-sensitive tech. Understand your portfolio exposure, whether in stocks, crypto, or ETFs. Avoid panic decisions. Informed positioning beats emotional reactions. This approach isn't about predicting every short-term move. It's about seeing the big picture and making decisions based on systemic understanding, not headlines. If you want more videos breaking down the financial impact of world events in a clear, fact-based way, subscribe and turn on notifications. And comment below, how do you think this development will affect energy markets and your investments? I'll respond to the most insightful answers.